Today, we're going to talk about D2 trades, 2 of them. And I'm going to show you, like I said, the real world application of this system and these rules that I was speaking about. The D1, which we're not speaking about today, are the end trend pullback trades. The D2 are what we refer to as reversal positions. These are when price reaches an extreme high or an extreme low and sets up at that level to then move off of it back against the more recent trend. So they're not my favorite trade personally, just because I like to stick with the trend. But if there's nothing presenting for the D1 or the A1 and a D2 presents and the risk reward is good, I'm still going to take that trade. And it paid me really well to do so last week. So here, we're going to go over the P&L first, and then we'll flip over to the charts. You can see this is GBP USD. Okay, this is a more recent trade than the second trade we're going to go over in a second. That was on GBP CHF. And these patterns work on every pair. I'm just realizing now that these are both GBP trades, but these patterns show up on stocks, they show up on all different Forex pairs, they show up everywhere. It's just technical analysis. So the GBP trade from the 8th, this was actually yesterday, you can see I had 2 entries, 2 different prices. 1.2679, that was where I had 1 entry, closed in 3 separate pieces, as you can see, 3 different close prices right here. And then I had the second half of my risk here, just 2 pips lower at 126.77. Now we were selling this, which means we wanted to see GBP USD come lower. As you can see, the trade worked out very nicely, over 40 pips from my entry with my best exit, and it ended up being a 2.69, almost 2.7% gain on just this one trade. Now, let's take a look over at the chart, and then we're gonna go look at the other P&L when we go to the next trade. But here you're seeing Friday, June 5th, carried over into Monday, June 8th. Where this divergence set up was actually on Friday, but it carried over into Monday, which is what set me up for the trade. Now, if you've seen the divergence training, which I hope you have, and if you haven't, I'll make sure that that's either on this page or linked somewhere below. I'll make sure you can see that. You'll understand how I'm drawing this divergence, but just to give you a quick refresher, the first reaction point that I'm using is this RSI high here at 3:30 on Friday. Then I'm looking to match that point to the price action high today. I could even use Friday's price action high, but just to be fair, since it's over the weekend, I like to do it to today's price action. This vertical line right here, this dotted line, that separates Friday to Monday. So now with price rising, as you can see, making higher highs, but the RSI falling, making lower highs, we have divergence. And that divergence sets me up with a zone here at the pin high of my divergence structure that I know is now resistance. And look, we actually came to that zone that was set here on Friday. We tested that zone right there with a lower high. See that body there? Lower high from there. Lower high, which is good. We tested it there during the Asian session on Monday. Now, overnight while I was sleeping, we continued to make lower highs as price tried to break to the upside but couldn't. Normally, with a TDI setup like this and EMAs like this, where the 800 EMA is way down here, then the 200, then the 50, normally I'm looking to buy this. But for the D2, when we broke here through the 50 EMA, tried to get back through, couldn't, what happened? We made a lower high from earlier back here, and we actually came back down through the 50. And that's where I decided to take my trade, because I knew I had a risk level defined here at about 20 pips, and I knew I could look to see this drop at least to the 200 EMA right there. And that's where I was out of most of the trade. I closed a little bit as it started to come up here, and then I got stopped, I believe. Here, we can pull the P&L. Did I get stopped? Yep. Nope, I was out of it here full at 40 pips. Now, if you take a look, it ends up pushing past the 40 pip take profit right there. See, that's 40 pips. It ends up pushing past that down to about 50 pips of profit. So you would say, Austin, just do you look at that like you left 10 pips on the table? Absolutely not. When I'm trading counter trend from the 50 EMA down towards the 200, I never assume that it's going to blow through the 200 and go down to the 800, which is what we call full reset. I always will take profit EMA to EMA going counter trend. And then of course, when it moved to the 200, my stop loss instantly went into profit, so I couldn't lose any money. Now that was the D2 trade here. And the reason again it is a D2 is because if you look, ton of rise last week. If I zoom out here, you could see from Friday, you have Thursday, Wednesday. I mean, look, Monday, Tuesday, Wednesday, Thursday, every day except Thursday, it went up. So coming into the week here, of course, you're still going to have a long bias. And we actually talked about this on our VIP chat. There was a long entry, a D1 entry in trend down here. So you could have actually been short the D2 here and then gotten the D1 here and gotten back in trend. But it was really important for me to understand the break of the 50, the retest, the structure point being held well, comes back through the 50, and we trade it to the next EMA. I hope that that's pretty clear. It shouldn't be too complicated.